Evolution is driven by people like us. The freethinkers. The game changers. The courageous ones. To improve is to change. To grow is to outlast. So, find the courage inside yourself to throw caution to the wind and call your own shots as we make the leap together. Break free from the confines of society. Create boundary-defying innovations. Redefine traditions and create a new culture built on agility and imagination. We believe each and every one of us can rise to the occasion. To build on our heritage and shape our future. To become the Philippines' first tech-glomerate. Together, we can rewrite the rules in the age of great transformation. Change is not for the faint-hearted. It's for the rebels brave enough to dream it. So, join us in paving the way for a new class of Aboitiz innovators. The great transformation begins with you and me.
Hello, everyone. Welcome to our Analysts briefing. Today, as part of our great transformation and ongoing efforts to improve the delivery of our briefings, we are going to report the financial and operating performance for the first quarter of 2023 of our publicly listed company, AboitizPower. But first, here are the house rules. All microphones are put on mute by default to minimize unnecessary background noise. Questions have been requested from our guests in advance. These will be prioritized in the Q&A today. If you have additional questions, please submit them through the Q&A button on the webinar controls. Questions submitted now will be answered at the end of the presentations if there is enough time. Those not taken up during the Q&A will be answered via email. The briefing will be recorded for documentation purposes. By joining this session, you consent to your name, voice, image, and chat comments being recorded for use and dissemination. If you do not consent to the foregoing, please do not join the session. Our program will flow as follows. To present to us today, we will have Mr. Manny Rubio, President and CEO of AboitizPower. At the end of the presentation, we will conduct a Q&A session where we will be joined by our CFO, Lisa Montelibano. And at the end of the event, when the Zoom platform closes, a pop-up screen will appear, which will allow you to provide feedback regarding the event. And now, on to our presentation, beginning with a short video.
AboitizPower powers progress in the lives of every Filipino every day. We power your homes, your businesses, and your communities in a reliable, cost-efficient, and sustainable way. Over the last century, we have been at the forefront of our country's energy transformation, reimagining sustainability and constantly powering a sustained and inclusive economic growth for our nation. Every day, we will keep the lights on, and every day, we are a step closer to a better future with AboitizPower.
And now, I will turn you over to Mr. Manny Rubio.
Thank you. Thank you, Jod. Good afternoon and welcome to AboitizPower's quarterly analysts briefing. We were off to a good start in 2023, having completed 2022 with record profits. We have secured the 20 billion funding to expand the renewable energy portfolio and broke ground on our 17 megawatt Tiwi binary project in Albay. These milestones, both from January, bring us closer to our target of growing our renewable energy capacity to 50% of our generation portfolio in the next 10 years. A month later, we were announced to be leading the Philippines-Japan consortium that will explore the development of technology and an integrated system for potential projects in the field of renewable energy. This collaboration also strengthens our relationship with Japan, a country known for its expertise in various industries, including energy. And we look forward to the opportunities this partnership may bring, including grants from the Japanese government. To recall, we also closed out in October last year a joint venture agreement with Mainstream Renewable Power, one of the leading RE developers in the world, for a 90 megawatt onshore wind project in Bicol. And this is also one collaboration area we're excited to materialize in the next year. After several years of downturn and uncertainty, the Philippines is exhibiting positive signs of recovery, which has led to the resurgence of power demand throughout the nation. So due to careful investments and delivery of our growth aspirations, we were able to establish our position in the industry, providing reliable, affordable, and responsible power to help fuel the nation's development. So now allow me to share AboitizPower's first quarter results. Our beneficial EBITDA for the first quarter of 2023 was 40% higher compared to the same period last year. This was mainly due to fresh contributions from GN Power Dingginin or GNPD, higher availability across our portfolio, and higher water inflows. With this, GNPD has been delivering much energy needed by the grid. The increase in EBITDA drove core income 158% higher than same period of last year. Interest expense was lower due to Thermal Luzon or TLI's lower financial lease, and taxes and others increased due to higher taxable income. So as a result, AboitizPower's net income for the first quarter of 2023 was 7.5 billion pesos, 161% higher compared to the same period last year. Cash decreased by 8% mainly due to dividend payment in March. And investments and advances increased by 7% primarily due to shared equity earnings from GNPD and SN AboitizPower. Capacity sales increased by 34% for the first quarter of 2023 compared to the same period last year due to fresh contributions from GNPD and higher Western dispatch of our portfolio resulting from high availability across the board. GNPD Unit 2 was selling to the spot market as originally planned in anticipation of high spot prices in the short to medium term. Our total revenue increased by 63% primarily due to fresh contributions from GNPD, higher availability across our portfolio, and high effective bilateral contract quantities and spot rates driven by indices. Our total energy sold was higher by 44% due to the same reasons mentioned in the previous slide. Our peso gross margin increased by 28% compared to the same period last year, mainly due to previously mentioned drivers. Our purchase power volume increased as a result of our trading and arbitrage strategy. Spot selling prices increased by 11% to 6.96 pesos per kilowatt hour, driven by higher demand and higher fuel costs of marginal plants. Bilateral contract quantity selling prices also increased by 19% to 6.49 pesos per kilowatt hour, mainly due to higher indices. So for our distribution business group, beneficial power sales increased by 8% year-on-year due to recoveries in demand from Odette. Energy sales from residential, commercial, and industrial customers were up by 7% and 9% respectively. Overall, average gross margin increased from 1.36 pesos per kilowatt hour to 1.97 pesos per kilowatt hour. This was due to timing in pass-through charges as fuel rates decreased. All our system losses are below the regulator cap of 5.5% and will continue to be the case moving forward. On WESM, average year-to-date LWAP was 6.60 pesos, 6.60 pesos per kilowatt hour. This slightly decreased by 2% compared to same period in 2022. Based on PEMC updates, the elevated prices in Q1 2023 were due to thin supply in the market attributable to several plant outages. Moreover, all natural gas plants in Luzon used alternative fuel during the Malampaya gas facility maintenance outage last February 4 to 18. Ilian remains to be on shutdown. For better appreciation, we will show you the Luzon supply and demand situation in the next slide. The supply and the Luzon supply and demand situation continues to tighten in the next few years. To meet existing critical market needs, we are optimizing our existing baseload facilities. Over the past few months, we have been seeing NGCP alerts for the Luzon grid. As our economy continues to recover, we expect that the tight situation will continue and become tighter in the medium term. For the benefit of those who are unfamiliar with this chart, please closely note the broken black line, which represents the intersection of annual peak demand and the grid's reserve supply requirements. Amidst this evolving supply and demand situation, which includes the impact of the DOE moratorium on the building of new coal plants and the depletion of Malampaya gas fields, we expect our GNPD units to play a significant role in addressing supply gaps and meeting critical market needs, and the soon-to-be commissioned solar plants that we have in Pangasinan to address peaking requirements. We have over 1,000 megawatts of disclosed projects so far. These have delivery commitments within the next 3 years. With that, we are well on our way towards delivering the 3,700 megawatt of additional renewable energy capacity in the next 10 years. This is part of our decarbonization journey. So allow me to update you on some of the projects in the next slides. The Kayanga Solar Project is for construction of a 94 megawatts peak solar plant located in Barangay Kayanga, Municipality of Bagallaon, Pangasinan. Construction activities for the control building, transmission line, switchyard, and PV module installations are ongoing. The project status is around 91% completed with zero lost time incident. The project is expected to begin commercial operations by July 2023. The Lawag Solar Project is a 159 megawatt peak plant located in Barangay Lawag, Municipality of Aguilar, Pangasinan. The construction activities of the PV farms, control buildings, substations, and transmission lines are all ongoing. The project status is around 65% completion with zero lost time incidents. The first phase, which has a capacity of 72 megawatts peak, is expected to be tested and commissioned by the third quarter of 2023. And the second phase, with a capacity of 87 megawatts peak, will be in the first quarter of 2024. The SNAP Magat's BEST project, which started construction in August 2022, is at 96% completion as of April and is expected to begin commercial operations in the first quarter of 2024. We have already completed the drilling of 12 new production wells on the APRI steam fields. This is currently producing a minimum 50 megawatts aggregated individual well capacity. Meanwhile, in Tiwi, there's an initiative to convert waste heat from the geothermal brine to power a 17 megawatt binary power plant. Construction activities and site developments are ongoing. The project status is at 64% with zero lost time incident. It is expected to begin commercial operations by the end of this year. So indeed, we have so much to look forward to for AboitizPower in 2023. Rest assured, we are not resting on our laurels. Although we have made significant progress, it is crucial that we continue to push forward and sustain our momentum. Our top priority remains the disciplined and diligent management of the business, and we will continue to work tirelessly to achieve our goals. As we wrap up today's presentation, I want to take a moment to acknowledge some exciting news. Professional networking platform LinkedIn recently recognized our company as one of the best places to work for this year. This recognition is a testament to our efforts to create a workplace where our team members feel valued, supported, and empowered. After all, it is through our team that we were able to leave a positive impact on the country, the environment, and society as a whole. Our drive for sustainability has always been the core of our operations, and we believe investing in our people is not only the right thing to do, but also contributes to our long-term success as a sustainable and responsible company. Furthering this cause, I'm pleased to share that we have launched in February a sustainability materiality assessment and are expecting to get the results soon. This assessment aims to identify and prioritize the most relevant sustainability issues we should focus on in the coming years. We believe that by doing so, we ensure our business operations are aligned with our sustainability aspirations, as well as with our stakeholders' needs and expectations in order to deliver our purpose. We understand that our success is intertwined with success of the communities we serve. Thus, we remain dedicated to creating long-term value for all our stakeholders. With your continued support and partnership, we are confident we can achieve our goals and build a sustainable future for all. So to summarize my presentation, here are our key takeaways for you today. First, as reflected in our operating performance, we are well positioned to address the resurgent power needs of the nation. Second, based on our pipeline, we continue to make significant progress towards achieving a balanced mixed portfolio in the next 10 years, our target for the next 10 years. Third, we're excited about the partnerships we've forged in 2023 and look forward to the opportunities that come with them. And finally, we remain dedicated to sustainability and believe our success is intertwined with the success of the communities we serve. Thank you. Maraming salamat. Good afternoon.
Thank you, EVR. Before we move on to our Q&A, we would like to request our audience to complete a survey. It'll pop out on your screen right now. Thank you. Now on to our Q&A. We have received advanced questions. We will take them up right now. If we have time, we will address questions raised live on the platform. For our first question, we have what can we expect from your portfolio this year in terms of margins given falling coal prices globally? Are we hedging less aggressively, and what are implications on the bottom line?
Thank you for the question. Good question. Our goal is to preserve, even improve the absolute value of our margins, especially in this period of volatile fuel costs, not just coal, even our LFO. No? The way we have been able to do so in the past year, especially, our hedging program is not speculative on the movement of the commodity, and we continue to offer hedged contracts to off-takers willing to contract fixed rates, making their costs stable, not dependent on the movement of the commodity. We are also trying to do, of course, fixed physical hedges, no, with when we can source actually fixed coal rates.
Thank you for that, sir. Second question: what was GNPD's earnings contribution to AP in terms of core NIAT and NIAT for 1Q 2023 versus 4Q 2022?
Yeah, Lisa's on the call. I asked Lisa to answer this question, please.
So GNPD's beneficial core NIAT and NIAT in the first quarter of 2023 was 4.3 and 4.4 billion pesos respectively. If we compare these results to the fourth quarter of 2022, core NIAT and NIAT declined by 16 and 8%, respectively, mainly due to lower forex translation, lower WESM rates, and shift of our sales from spot to BCQ.
Thank you for that, Lisa. Next question. What is the estimated debt repayment schedule on a look-through basis for the next 3 years? And what is management's priority? Is it to refinance in the current interest rate environment, or are there other options, in particular, financing related to existing balloon bullet structures?
Lisa, answer this?
Okay.
Yeah.
So first, our understanding first on the question was that look-through meant kind of pertaining to the debt that we don't consolidate. And, the significant debt that we don't consolidate is only the GNPD one, and that's not coming to mature until late or early the following decade, actually. But in terms of, let's say, the bonds, we technically don't need to refinance anything until 2026. Anything that we will do prior to that is opportunistic, and our priority is to finance in the most optimal way, balancing negative carry, tenor, and cost.
Thank you, Lisa. Next question. For your large hydro plants, how much did the EBITDA and energy sold grow year on year in 1Q 2023?
Okay. Well, comparing first quarter 2023 against the same period last year, the large hydro plants energy sold and EBITDA increased by 19% and 33% respectively. The increase is mainly attributable to higher water inflows and higher ASPA margins with higher acceptance levels by NGCP.
Thank you for that, sir. Next question. May I ask the reason for the lower interest expenses and depreciation year on year?
Liz, can you answer this?
Get this. So interest expense was lower due to Thermal Luzon or TLI's lower finance lease cost. And then the depreciation expense is lower than first quarter of last year, because actually in first quarter of 2022, we actually booked depreciation for GNPD, which we later on reversed pending the acceptance of the unit.
Thanks for that, Lisa. Our next question is, may I ask the driver for the huge jump in gross margin for the distribution segment? Is this sustainable or more of a one-off or timing issue?
Well, as I've mentioned in the presentation, and even in the past presentations, the jump in the gross margin for our DU is a timing thing. It's just that the trend now is actually the fuel prices are going down, so there's an impact now, positive impact now on the DU compared to last year. So yeah, it's timing, but as it continues to go down, we will continue to realize the margins based on the billing of the generator and the billing to our customers.
Thank you for that, sir.
The difference between the two.
Yes. Our next question is, how would be the year-on-year earnings growth if not for the impact of Typhoon Odette in Q1 2022?
Without the impact of Typhoon Odette in first quarter of 2022, EBITDA growth would have been 33%, core income growth would have been 128%, and net income growth would have been 130%.
Thank you for that, sir. Our next question, does an El Nino event affect your hydro portfolio?
Yes, it does. It's actually not just El Nino. There are also, since our biggest hydro, Magat, is primarily built for irrigation, we're also subject to the schedules of National Irrigation Administration with regard to their maintenance, and they would usually maintain during summers. But the run of river, especially, of course, will be impacted by El Nino.
Thank you, sir. Our next question, on the EPSA with Meralco, may we ask whether this reduces AP's spot exposure to the WESM? May I know whether TLI's 370 megawatt was servicing a contract prior to the EPSA, or was it exposed to the spot market?
Okay. Can I just add to the previous question before I answer this? No? I guess the question on regarding El Nino is because there's an expectation of El Nino, although it's really a mild summer. And we're expecting that the El Nino, even though it was forecasted, will be short, and we'll be expecting better inflows in the next few months. Now, to answer this question, yes, this will reduce the spot exposure of AP since 370 megawatts that TLI offered. For the contract was available capacity that TLI was selling to the spot market. But having been able to have the opportunity to sell at almost the benchmark price that we are looking at with a fuel pass-through and with a finite term, it reduces the volatility. So this is a good contract.
Thank you, sir. Our next question is still related to EPSA. No? What's the 34% year-on-year growth in capacity sales driven by the EPSA secured for GNPD? Could you give more color on this?
As discussed in our presentation, capacity sales increased by 34% for the first quarter of 2023 compared to the same period last year due to fresh contributions from GNPD and higher WSM dispatch of our portfolio resulting from higher availability, and it's also, of course, the significant portion was also exposed to the spot market when spot market prices was also high.
Thank you. Our next question is, how does management mitigate long-term contract risk in the event power agreed upon cannot be delivered due to prolonged forced outages or other events, especially in a tight supply situation? Perhaps using GN Mariveles as an example, does management believe there is a scenario when there is no supply available to cover committed contracts?
Well, the contract shall be honored depending on the provisions that was agreed upon with the customers, and we do that. Having said that, we are continuously evaluating our portfolio of generation assets to optimize the suitability and profitability of our sales and contracting place. Having a diverse portfolio of assets in terms of energy technologies, both in thermal and renewable, and in contracting strategies is a competitive market position that we continue to leverage. I think the question with regard to there's no supply available to cover committed contracts, well, then we agree that then has a problem, because with the must offer rule, all capacities need to be offered to WSM. As long as the supply capacity is higher than the demand numbers, then there should be available capacity that we can buy or anyone can buy from WSM. Question is, of course, how much. That's why we are really trying to optimize and manage the risk of a contracted position versus an open position, trying to maximize margins.
Thank you for that, sir. Next question. Can we please get an update on the GN Mariveles and outlook for availability going forward?
Yeah. First, I'd like to highlight that AboitizPower took over management and operations and maintenance management of GMEC and GNPD last May 2022, and we're able to fill up critical positions by September. So we just recently finished a major plant maintenance outage for GMEC. We expect it to perform at par with NERC standards, our benchmark reference for coal availability, and at least they should be around 80 to 82%, given again the historical performance of GMEC. We will continue to improve on that as we actually now move on to the balance of plants. We believe that we're able to address most of the major equipment. We're now looking at a balance of plants that would still put the plant at risk in terms of outages.
Thank you for that, sir. Next question. How many RES contracts are expected to expire this year? What percentage are from those signed in 2020 or prior?
About 400 megawatts of retail contracts are expiring 2023. Approximately 200 megawatts or 47% of these contracts were switched in 2020.
Thank you, sir. Next question. May I ask why purchased power more than doubled year on year in the first quarter of 2023?
Yeah. Given our availability performance, if it's just like for like, without any outside forces, it should be the same. However, as I mentioned during my presentation, our purchase power volume increases as a result of our trading and arbitrage strategy. So if it's cheaper for us to buy in the market than produce, then that's what we're going to do. Secondly, our RES companies buy and sell power from the market, not necessarily produced by our plants if there's an opportunity to do so. And that's part of the strategy for our RES.
Thank you for that, sir. Now, we have time for one last question. And our last question is, for the new renewables projects, what is the progress? Any EPC procurement-related concerns, and have project costs trended within expectations?
Okay, thank you. Good question. In general, the timing of our projects are based on the pacing of NGCP's transmission line construction. We want to make sure that we can export the full capacity of our plants to the grid once it comes online. This is based on a lesson learned from Sakasan, which had a lot of stranded capacity for years. So from the list of our disclosed projects, 2 solar projects are still in the tendering phase. EPC tendering that's ongoing, target to close EPC contracting by the target is to close by 2023 in the third quarter. Currently going through EPCs, the clarifications, but there are no significant red flags as far as the current projects are concerned. With the EPC, nothing that we cannot manage.
Thank you, sir. That wraps up our Q&A. We still have some questions. Rest assured that we'll answer them all via email. For the benefit of those who missed the session or would like to rewatch the event, we would like to remind everyone that this briefing was recorded and will be uploaded on our website as soon as possible. And at the end of the event, there will be a survey form that will pop out that will allow you to type out additional feedback. Before we end, on behalf of the entire presentation development team, led here today by our CEO, we would like to thank our analysts, banks, investors, and other friends in the financial community for joining us and for helping us tell our story. For those of you who will join us for the AEV Analysts briefing, see you at 5 p.m. later. And for the rest, see you all again for our first half briefing on August 1. Until then, goodbye for now.
Thank you.